How did J.P. Morgan's secret meetings end the panic of 1907? Imagine a city on the brink of financial collapse, with banks and trust companies running out of cash and the stock market plunging. That was the scene during the panic of 1907. It was a time when the economy was fragile, and without a central bank to step in, things could have spiraled out of control. Now, how did a few secret meetings among a handful of powerful bankers turn things around? Let's find out. During the crisis, many banks and trust companies faced massive withdrawals. People were rushing to pull their money out, fearing their savings would vanish. The stock market was crashing because there was not enough cash to keep trading going smoothly. The New York Stock Exchange was close to shutting down entirely, which could have triggered a nationwide economic disaster. J.P. Morgan, a leading financier, saw the danger and decided to act. He called together the presidents of the biggest banks and trust companies in New York in secret meetings at his office. These meetings were not public, and the bankers kept the details quiet. Morgan used his reputation and influence to persuade others to join him in saving the financial system. He pledged a large amount of his own money and convinced other bankers to pool their resources. They agreed to lend money to struggling banks and trust companies to stop the bank runs. This created a sort of makeshift central bank, which was not officially there at the time. Morgan also helped organize a bailout for the Knickerbocker Trust Company, one of the largest trust firms facing collapse. When the New York Clearing House Association initially refused to help some failing institutions, Morgan stepped in. He coordinated support to prevent these banks from closing. He also arranged for U.S. Steel to buy a rival steel company to prevent its failure, with President Theodore Roosevelt's approval. These moves stabilized the market and calmed fears. Thanks to Morgan's leadership, the panic started to fade. The runs on banks slowed down, and confidence returned. His secret meetings and quick actions prevented a total breakdown of the financial system. Although the economy still faced a downturn, the crisis was contained. This event showed how important leadership and quick thinking are during financial emergencies. The Panic of 1907 also highlighted the need for a formal central bank in the United States. It led to the creation of the Federal Reserve System in 1913, which now acts as a lender of last resort. Morgan's role in ending the panic proved that private individuals could step in when the government was not prepared. His secret meetings saved the day and changed how the country handled financial crises forever.